Welcome to FinTalk podcast series. Today, we're diving deep into something that, let's face it, makes most of our eyes glaze over. Health insurance in India.
Uh-huh.
It's just packed with terms that sound like they belong in a legal textbook, and that fine print, forget about it.
Exactly. It's like trying to decipher a whole new language,
Yeah.
really. And that's precisely why we're here today.
Right.
Our mission in this deep dive is to take those common health insurance terms and features, the ones you see in Indian policies, and translate them into plain English.
Good.
We want to show you with some real-life examples what they actually mean for you and your financial well-being.
Think of this as your shortcut, maybe, to becoming a savvy health insurance consumer. We'll be exploring several key areas, giving you the inside scoop on what to look for, and maybe, just maybe, what to steer clear of when you're choosing a plan.
Sounds good.
So where should we start to unravel this?
Well, a really common point where people can get tripped up is the idea of a copayment.
Ah, copayment, okay.
You might be offered a policy with a tempting lower premium, you see, if you agree to pay a portion of your hospital bill yourself.
Right, that initial saving can look pretty attractive. Like, imagine
Oh.
an agent saying, look, you can get this 5 lakh cover for 7,000 rupees a year, but
Uh-huh.
if you agree to a 20% copayment, we can bring that premium down by another, say, 1,800 rupees. That 1,800 saving feels like free money, doesn't it?
It really does, on the surface. But let's think about someone, let's call her Priya, a young professional maybe, considering this offer. Now, imagine Priya unfortunately needs to be hospitalized, and her bill comes to 2 lakh rupees.
Okay.
With that 20% copayment clause, the insurance company will cover 80%, which is 1,60,000. But Priya, she'll have to shell out the remaining 40,000 rupees from her own pocket.
Ouch. 40,000. So for that upfront saving of just 1,800 rupees a year, Priya suddenly faces a 40,000 rupee expense when she actually needs the insurance. That puts that small premium reduction in a whole new light. It's almost like the insurance company is, I don't know, incentivizing you not to claim. Is that a fair way to look at it?
That's an interesting perspective. In essence, yes, a copayment shifts a portion of the financial risk back onto you. And if we do the quick math, well, it would take Priya over 22 years of saving that 1,800 rupees annually just to equal that single 40,000 rupee copayment.
22 years?
Yeah. So for most people, the potential long-term cost just significantly outweighs that small immediate saving.
Right.
However, maybe for someone very young, very healthy, with a really tight budget, perhaps a policy with a small copayment like 5% might be a calculated risk, to get broader coverage they otherwise couldn't afford. It really comes down to understanding your individual risk profile.
That's a good point. It's not entirely black and white. So when else might a copayment be something to actually consider?
Well, you might encounter them in certain group policies where they're just a standard feature, unavoidable sometimes. Also, for older individuals, or maybe those with significant pre-existing conditions, agreeing to a copayment can sometimes dramatically lower the premium.
Making it more affordable, perhaps.
Exactly, making coverage more accessible when it might otherwise be,
Yeah.
prohibitively expensive. But again, for the majority, especially younger, healthier folks, avoiding copayments is usually the more financially sound long-term strategy.
Okay, co-payments unpacked. Got it. Now, another area where those seemingly small print details can really bite you is with something like room rent restrictions.
Yes.
I've seen policies that put a cap on how much they'll cover for your hospital room per day.
Yes, and this is another critical aspect to get your head around. A policy might have a clause stating a maximum room rent it will cover. Often it's expressed as a percentage of your total sum insured.
Like 1%.
Exactly. For example, on a 5 lakh rupee policy, they might cap the room rent at 1%, which works out to 5,000 rupees per day.
Okay, so what happens if someone, let's stick with Priya, opts for a slightly more comfortable room that costs, say, 10,000 rupees a day? She might just think, okay, fine, I'll pay the extra 5,000 per day myself.
That's the common misunderstanding, you see. The real catch here is that many insurers have clauses stating that if your room rent exceeds the policy's limit,
Uh-huh.
they will proportionally reduce their coverage for other related medical expenses.
Proportionally. Wait, what does that mean exactly?
It means it's not just the extra room rent Priya would have to pay.
Oh, dear.
Let's say Priya's surgeon's fee is 50,000 rupees. Because she chose a room that cost twice the allowed amount, 10,000 versus 5,000, the insurer might only cover half of the surgeon's fee.
So only 25,000.
Precisely, leaving her to pay the other 25,000 out of pocket. And this same proportional reduction could apply to other big costs too, like consultant fees, diagnostics, anything linked to that hospital.
Mm.
Stay in the price of your room.
Wow, that's a really nasty surprise waiting in the wings. That could add up incredibly fast.
It really could.
So the big takeaway here is to really try and avoid policies that have these kinds of caps on room rent if you possibly can.
Absolutely.
Oh, yeah.
Or if you do end up with such a policy, you need to be absolutely certain that you'll choose a room within the specified limit. Otherwise, you risk those unexpected and potentially huge reductions in coverage for other crucial medical services.
Right, okay. Moving on then. Let's talk about those policies that flash a really high sum insured, 10 lakhs, 20 lakhs, but they come with a surprisingly low premium. That always makes my internal alarm bells ring.
Your instincts are probably spot on there. One of the ways insurers can offer what looks like a lot of coverage for a lower price is by including something called disease-wise sublimits in the policy.
Okay, break down disease-wise sublimits for us. What are they exactly?
They're essentially caps on the total amount the insurer will pay out specifically for certain illnesses or medical procedures, regardless of the overall sum insured stated in your policy.
So like a limit within the limit.
Pretty much. For instance, a policy with a, say, 10 lakh cover might have a sublimit of maybe 2.5 lakh for all expenses related to cardiovascular diseases,
Okay.
or maybe 2,75,000 for knee replacements, or perhaps 2 lakh for other major surgical operations, even though the policy says 10 lakhs overall.
So let's go back to Priya. Even if she has that 10 lakh policy, if she needs, say, a slip disc surgery and the total bill is 4,36,000, but the policy has a 2 lakh sublimit for major operations, she's going to be on the hook for a big chunk of that.
Precisely. The insurer will only cover up to that 2 lakh sublimit. Priya is left paying the remaining 2,36,000 herself, even though her policy theoretically covers 10 lakhs.
Wow.
This is how these companies can manage to offer those high-sounding coverage amounts at seemingly low premiums. They're limiting their financial exposure for the very serious and often very costly conditions that are most likely to lead to large claims.
That feels a bit like a loophole almost.
You can see it that way. While generally best avoided, maybe if you have a very strong family history of one specific condition and a policy happens to have a high sublimit just for that, it's a factor away. But it's risky.
Yeah, because you can't predict everything.
Exactly. You can't predict future health issues. So the crucial thing is to always dig into the policy details. Check for these disease-wise sublimits and really try to avoid them if at all possible.
Got it. Assume they're bad unless proven otherwise.
Generally, yes. It's usually wiser to opt for a policy without these kinds of restrictions, even if the premium is slightly higher. That way you ensure you have more comprehensive coverage when you truly need it.
Okay. Now, another term that pops up in policy documents is waiting periods. I know these are common, particularly for pre-existing conditions, right?
That's right. Most health insurance policies in India will have waiting periods before certain medical conditions or treatments become eligible for coverage. When you buy a policy, you'll typically need to declare any pre-existing medical conditions you have.
Like high blood pressure or diabetes.
Exactly. And the insurer might even require you to undergo some medical tests based on your declaration.
And this declaration then ties into the waiting period. How does that work?
Precisely. If Priya declares a pre-existing condition, like high blood pressure, the policy might stipulate a waiting period. It could be 2 years, sometimes 3, even 4 years, before any claims related to her blood pressure or its complications are covered.
4 years. Wow.
Yeah. So the risk here is if Priya has, say, a heart attack within that waiting period, and it could be linked to her pre-existing high blood pressure, well, her claim might be denied.
That's a significant chunk of time to potentially be without coverage for a known or related health issue. 2 to 4 years can feel like an eternity when your health is concerned.
It certainly can. So the key takeaway here is to always aim for policies that have the shortest possible waiting periods, especially when it comes to pre-existing conditions you've declared. Compare that closely.
Makes sense. Let's switch gears a bit and think about the expenses that crop up even before you're admitted to the hospital and maybe after you're discharged.
Ah, yes. Pre- and post-hospitalization.
I'm talking about things like, diagnostic tests beforehand, follow-up appointments afterwards.
These are really important costs that can often be overlooked. Imagine Priya feels unwell. Her doctor orders a series of blood tests, maybe an MRI, which together costs, say, 15,000 rupees.
Okay.
Then she's hospitalized, And the actual hospital bill itself is another 10,000 rupees. Some health insurance policies might not cover those 15,000 rupees worth of pre-hospitalization diagnostic tests.
Really?
Yes. Or they might not cover her follow-up consultations and medications after she's discharged.
That seems a bit short-sighted, doesn't it? As those pre- and post-hospitalization expenses can really add up and significantly impact your overall out-of-pocket spending.
They certainly can. That's why it's crucial to choose a policy that offers coverage for a reasonable period, both before you're admitted, typically look for 30 to 60 days cover.
Okay, 30 to 60 days before.
And also, for a period after you're discharged, maybe 60 to 90 days or even 180 days in some better policies. This ensures you're not left foot in the bill for these related but technically out-of-hospital medical expenses.
So definitely another key detail to scrutinize in the policy documents. Find those pre- and post-day limits.
Absolutely.
Now, what happens when you've actually used up your entire sum insured, say in one go? That sounds like a pretty stressful situation.
It is, definitely. Imagine Priya's policy has a 5 lakh sum insured, and unfortunately, a family member on the same plan has a serious illness, like a major heart complication. It requires a lengthy hospital stay that costs 4,88,000.
Wow, nearly the whole amount.
Exactly. The entire coverage is almost gone. Now, if another family member falls ill shortly after that, that 5 lakh is essentially depleted. There's nothing left.
That's where the restoration benefit comes in, right? I've seen that mentioned as a feature sometimes.
Exactly. A restoration benefit means that if your policy's sum insured is completely used up because of a claim, it will automatically be reinstated or restored back to the original amount.
So it refills.
Kind of, yes. This can be incredibly valuable, particularly in family floater policies where multiple members are covered under the same sum insured. It acts like a safety net.
Are there any catches we need to be aware of with this restoration benefit? Does it always refill completely?
Well, there can be differences. Some policies offer unlimited restoration for any illness, which is obviously a fantastic feature, the best kind.
Right.
However, others might have restrictions. For example, they might not allow the restoration benefit to be due for the same illness again within the same policy year for the same person.
Ah, okay. So if Priya used it all for her heart condition, it might refill, but not for another heart issue for her that year.
Potentially, yes. Or sometimes it might only restore after the entire sum insured is exhausted, not partially. So it's really important to understand the specific terms and conditions, the how and when of the restoration benefit, if your policy includes it.
Definitely sounds like a valuable safety net to look for, especially if you have a family covered under one policy. Just read the fine print on how it works.
Correct.
Now, let's talk about medical procedures that might not require a full 24-hour stay in the hospital. What about those?
These are generally referred to as daycare treatments or procedures. Think of things like dialysis, chemotherapy, maybe cataract surgery, or even something like a laparoscopic appendectomy where you might be admitted and discharged within the same day.
Right, they don't keep you overnight.
Exactly. But these procedures can still be quite expensive, even without that overnight stay.
And I've heard that some policies might actually not cover these types of treatments.
That's correct. Some health insurance policies specifically exclude coverage for daycare treatments. They often define hospitalization strictly as requiring a stay of more than 24 hours. So, if Priya undergoes a daycare procedure costing, say, 80,000 rupees for her appendicitis, her claim could be completely denied if her policy has this 24-hour minimum stay requirement and doesn't explicitly list her procedure as a covered daycare treatment.
That's another crucial detail to check then, because so many common and costly procedures now fall under this daycare category.
Absolutely. Things are advancing medically.
So the smart move is definitely to prefer policies that explicitly state they do cover a wide range of daycare treatments.
Agreed. You never know when you or a family member might need one of these procedures, and the costs, as we said, can still be substantial.
Okay. Now, what about situations where someone needs medical treatment, but they can't actually get admitted to a hospital? We heard about this being a real challenge during the recent pandemic, for instance.
Right. That brings us to something called domiciliary expense coverage, or sometimes home hospitalization.
Domiciliary.
Okay. This type of coverage helps with the medical expenses you incur for receiving treatment at home. This might be necessary if you have a condition that genuinely requires hospital-level care, but maybe a hospital bed isn't available.
Like during a surge.
Exactly. Or perhaps if the patient's medical condition makes it impossible or completely impractical for them to be moved to a hospital.
So it's like getting some financial support for setting up a sort of mini hospital at home, in a way. Under doctor supervision, presumably?
In a simplified sense, yes, and definitely under active medical supervision with specific conditions met. While it's certainly a good benefit to have, especially in unpredictable circumstances like a widespread health
A
crisis,
nice reassurance.
it is, but it might not be the primary factor most people prioritize when choosing a health insurance policy compared to, say, room rent caps or sublimits. However, it's certainly a valuable layer of protection to have tucked away in there, just in case.
Okay, a good to have rather than essential for everyone. Understood. Let's move on to something a bit more encouraging, perhaps. The no-claim bonus.
Ah, yes, the NCB.
I understand this is like a reward for being healthy and, well, not needing to use your insurance.
Exactly. A no-claim bonus, or NCB, is basically a way for insurers to incentivize policyholders to maintain good health and avoid making claims unless absolutely necessary. It typically works by increasing your sum insured above and beyond the original amount for each consecutive year you don't file a claim.
So if Priya starts with that 5 lakh cover we talked about and she doesn't make any claim for a whole policy year, her potential coverage might actually increase the next year.
Yes, it could. Some policies offer an increase of, say, 50% for each claim-free year, often up to a maximum limit, perhaps doubling your initial sum insured over time.
50%, that's quite significant.
It can be. So in Priya's case, her 5 lakh cover could become 7.5 lakh after the first claim-free year, and potentially 10 lakh in the second year, assuming a 50% bonus capped at 100%. Of course, if a claim is made, the accumulated bonus might be reduced, sometimes all the way back down, bringing the sum insured back towards the original amount for the following year.
That sounds like a pretty good incentive to stay healthy. Is there anything specific to watch out for with the no-claim bonus? Like, are they all created equal?
Not quite. It's worth checking how significant the bonus percentage actually is. A very small bonus, maybe only 5 or 10% per year, might not make a huge difference over the long run. It could just be more of a marketing point.
Right.
A more substantial bonus, like 20% or, as we mentioned, even 50%, can really boost your effective coverage over the long term, making it a genuinely valuable feature.
Makes sense. Look for a meaningful percentage increase. Now, who doesn't appreciate getting something for free? What about those free health checkups that some policies seem to throw in? Are they worthwhile?
These are definitely a nice perk to look out for. Many insurers now offer annual or sometimes periodic free health checkups to their policyholders as part of the plan.
And these are proper checkups.
Usually, yes, they cover a standard set of tests. Considering that a basic health checkup package could easily cost you anywhere from, say, 1,000 to 1,500 rupees, maybe more, having this included in your policy can save you some money directly.
True.
And just as importantly, it encourages you to actually get regular checkups, which is great for peace of mind and crucially for early detection of any potential health issues.
So while it might not be the absolute deciding factor when choosing between two otherwise great policies, it's certainly a welcome added bonus if it's included.
Absolutely. It's kind of a win-win situation.
Yeah.
You get a valuable health checkup at no extra cost,
Mm.
and the insurer potentially benefits from early detection and management of health problems down the line.
Good point. Now, for those who are interested in alternative forms of medicine, what about coverage for AYUSH treatments?
Right. AYUSH, that stands for Ayurveda, Yoga and Naturopathy, Unani, Siddha, and Homeopathy. Some health insurance policies do extend coverage to treatments under these systems. This can be a valuable feature if you prefer or utilize these alternative systems of medicine. However, there's usually a key condition attached.
What's that?
It's important to note that the coverage typically applies only when you are hospitalized in a government-certified AYOH facility.
Ah, so not just any practitioner, and it has to be hospitalization.
Generally, yes. Outpatient AYOH treatments, like consultations or therapies without hospital admission, might not be covered under this benefit, so you need to check the specifics.
So it's good to know it exists if you're inclined towards these treatments, but be aware of the specific conditions attached to the coverage, particularly the need for hospitalization in a certified facility.
Exactly. The scope of coverage might not be as broad as for conventional allopathic hospitalization.
Okay. Let's move on to a topic that's often top of mind for many people, especially those planning a family. Maternity benefits. I know this can be a complicated area with health insurance.
It certainly is. Finding comprehensive maternity coverage can be quite a challenge, actually.
Why is that?
Well, insurers often view this as a benefit with a relatively predictable likelihood of claims. Unlike an accident or sudden illness, pregnancy is often planned.
So they know a claim is likely coming if someone takes that benefit.
Pretty much. Most individuals or couples opting specifically for maternity cover are likely planning to use it. Because of this predictability, offering extensive maternity benefits can be quite financially significant for insurers to bear.
Right. So what are some of the common limitations or hoops we see with maternity coverage in health insurance policies?
You'll often find policies with noticeably higher premiums if they include maternity benefits. That's the first thing.
Okay, more expensive.
Then, others might only cover a relatively small portion of the total pregnancy and childbirth-related expenses, maybe just 25,000 or 50,000 rupees, which often doesn't cover the full cost in many cities.
So a fixed low amount.
Exactly. Or they might only offer it as part of a family floater plan, meaning even if only one person needs it, the whole family premium goes up. And crucially, there are often longer waiting periods associated specifically with maternity benefits, sometimes 2, 3, or even 4 years after taking the policy.
4 years waiting for maternity. Wow.
Yes, so you can't just buy a policy when you find out you're pregnant.
Right. So it really comes down to carefully weighing those potentially much higher premiums, the specific limitations like low caps and long waiting periods, against the actual benefits you anticipate needing. It might not always be the most cost-effective route for everyone, surprisingly.
That's precisely the point. A thorough evaluation of the costs versus the actual usable benefits is crucial. Adding maternity coverage can significantly increase your overall premium, so you need to be sure it makes financial sense for your specific situation and timeline.
Okay, good advice. Finally, let's touch upon getting reimbursed for just routine doctor visits, what are often called OPD or outpatient department consultations.
Ah, yes, the quick visits.
I know many people would absolutely love their insurance to help with these regular expenses like consultation fees, maybe small tests.
And while it's a highly desirable benefit for many policyholders, offering broad OPD coverage can be quite expensive for insurers.
Oh.
Think about it, the sheer volume and frequency of outpatient visits and consultation fees across all their policyholders would be huge.
Yeah, lots of small claims adding up.
Exactly. As a result, policies that do include OPD benefits often come with significantly higher premiums, or they have very strict limits on the amount they'll actually cover per visit or per year, often quite low.
So you might end up paying, say, 5,000 rupees extra in premium over the year, but only be able to claim back maybe 2,000 rupees in actual OPD expenses because of the caps.
That's often the reality, yes. In many instances, it might actually be more economical to just pay for routine doctor consultations out of your own pocket rather than opting for a policy with a substantially higher premium just to get that limited OPD coverage. You really need to sort of crunch the numbers for yourself. Estimate your likely OPD spending versus the extra premium cost and see if the added cost truly justifies the potential reimbursement you might receive. It often doesn't.
It sounds like navigating the world of health insurance in India really requires a good dose of careful consideration and, frankly, understanding all these different moving parts.
Absolutely. Understanding these common terms and features, co-payments, sublimits, waiting periods, all of it is the essential first step towards making well-informed decisions.
And choosing a policy that works for you.
Exactly. Choosing a policy that genuinely meets your individual or family's needs without any unwelcome financial surprises cropping up down the line when you least expect them.
Well, we've certainly covered a lot of ground today, from demystifying co-payments and room rent restrictions all the way through to the nuances of OPD benefits and maternity coverage. It's clear that there's much, much more to a health insurance policy than just that headline sum insured figure.
That's absolutely right. Remember, don't hesitate to really delve into the specifics of your own policy documents or potential policy documents. Ask your insurer or agent detailed questions, get clarifications in writing if needed, and take the time to properly compare different plans feature by feature, not just on price.
Knowledge is power here.
It really is. Being well-informed is your strongest shield in the world of health insurance.
Thank you for listening to this FinTalk episode.